All right, let's get started with the first conversation. If you haven't yet filed your income tax returns for the year, chances are that you've been getting messages from the IT department saying that now would be a great time to do so. You still have about half a month to go. And we're going to talk about the mistakes that sometimes are made in that rush to file returns, especially if it is left so late. Arvind Rao, who is a chartered accountant, a certified financial planner, and the founder of Arvind Rao Associates, is joining me now to take you through what you need to bear in mind. Arvind, thanks so much, as always, for taking the time, for joining us and speaking to us. In your experience, I think to a certain extent the deadline was extended because of certain teething troubles with the portal. Having used that portal yourself, or rather if your team has been using it, are those niggles now sorted out? Is it much better now, an experience filing taxes?
Definitely, it is much better than what it was in June or July. But I think the portal still is not as seamless as the previous one used to be. And I say this especially because we're in the last month of the extended deadline. And but yes, I mean, there are days or there are times when we face certain challenges to complete the upload process even now.
You know, so the point of this portal was to make it easier for the tax filer to do their own return filing. But one of the most common mistakes that you've said when I asked you what the common mistakes are, is that people tend to make mistakes when they're filing themselves if they haven't filed before. Why do you say that is? Is it that complicated?
Well, what I meant was, I think, let me rephrase the mistake that is, which I like to highlight as of now. One is that people who have never filed their returns on their own should not take that step of filing it on their own this time of the year around, because there are, like we mentioned, that the new portal that the department has transited to is not yet glitch free. In fact, very recently we had someone who came to us after struggling for close to 6 weeks trying to upload her own return, and in the bargain we exactly don't know what went wrong when she input the data. But she ended up paying some amount of tax, and despite that, she was not able to complete her upload. And ultimately, she handed it over to us. And when we saw it, there was absolutely no requirement to pay any tax, and we ended up claiming a refund for her. So that's why this conclusion that people who have been filing and have a hang of it may take a chance, but people who have never done it on their own, I sincerely feel that when you have only a fortnight left, they should not experiment, and they should be open to engaging with someone to have their return filed.
Okay, that's certainly something to bear in mind. What specifically would you say is better though about the new filing process? Because it was set up to be something that was usable by people. Do you think eventually people will get comfortable with it? And perhaps you need to spend a little time, Arvind, and figure things out?
Absolutely. I mean, it's not that the new portal has no merits. There are a lot of new things that are coming up, and there are few things which were not available in the previous portal, but which are available now. And I think most of our viewers would have also come across the new annual information statement that is now available on the portal, which gives a detailed track of a lot of transactions that are happening on the taxpayer's end in one place, and is ultimately poised to take over the Form 26 AS as has been around all this time. So definitely, given some more time, taxpayers will be more equipped to maybe understand the portal better and do their own transactions. But since this is the first year, I think one should tread with a little caution.
Absolutely. Let's get to the second point that you mentioned, which relates to capital gains. And I think if people have sold in 2020, then I think they have made some capital gains. But if I'm not mistaken, since this is the financial year ending March 2020 that we're talking about,
21.
we're talking about, or rather, no, sorry, this is for 2021. Apologies for that. So if they've sold in March, in that interim, they've made quite a bit of capital gains. What do they need to bear in mind?
So I think first thing here is that last financial year was the year where most people spent most of their time under lockdown. And but equity markets after I think somewhere around June or something happened to be on the rise. And we have come across so many people who have turned out, and rather let me rephrase it, ventured out to be good investors and heavy investors in the equity markets. So yeah, with the advent of so many platforms, online apps where people have done transactions, account opening was free. Most brokerages were really competitive. So people have gone left, right, and center to open new accounts and start trading. So the mistake here that I am urging people to avoid is that while you have done these transactions now, before you file your returns, it's important to go back to each of this app or each of these platform, obtain the capital gain statement for trading in whether it is shares, futures, options, or even mutual funds. Obtain these statements and ensure that all these are incorporated in your ITR, because which I mentioned, like in the annual information statement, all these transactions are now getting reflected. So I'm sure that these 15 days time is not sufficient for someone to sit and track and reconcile the AIS. But I think what they should do is go back and check which are the apps they access, download these statements, incorporate it, see what the liabilities, pay up, and be stress-free.
Absolutely. In fact, there was one other thing that I had to ask you, which is that what if somebody sold in the initial part? You mentioned June, post June is when you saw equity markets rise. There would have been some people who had, say, put money into slightly more adventurous options, especially in the equity market, and who would have booked out at a loss when that initial crash took place. If you do have capital losses for the financial year, Arvind, then what you need to bear in mind, you can carry it forward to the next year, right?
You can, but and I'm happy that you took up this point, because these losses can be carried forward provided your return is filed on time. So if you miss the December bus, then although you are still eligible to file your return in Jan, Feb, March, but then these losses that you might have incurred, you will not be able to carry these forward and utilize them in the subsequent years.
Okay, lovely. You've mentioned cryptocurrency, and I think a lot of our viewers tuning in will have their ears perk up. With regard to cryptocurrency gains, where does that fit in as far as your filing of tax returns is concerned?
I deliberately have put this point here, Alex, because I think all of us are aware that there is a lot of noise and talk now happening about whether crypto is legal, whether it has to be recognized by the government or not. But amidst all this, I think one thing is for sure, that the tax department's stand is very clear on this. Whether crypto is legal, illegal, they don't bother. But if there are any profits that you have booked, those are going to be taxed. So the tax laws yet have to be drafted on the same, whether they're going to be treated as capital gains or any other income. I think for now, what seems to be prudent for anybody having some gains in crypto is to take this as like there's a head called income from other sources, where all residual income is taxed. It's better to tax this income there and be clear of at least the liability of taxes on these gains. So one should not factor it in that there is no clarity on crypto and hence this income is not taxed. That is definitely not the case. That income will be taxed.
That is in fact a very wise suggestion that you are making, because if there are substantial gains that people have made, and because of the volatility of this asset, it is something that could have happened. you could face scrutiny, because this is something that the tax department has been doing, Arvind, in that
Yes.
it has been scrutinizing large value transactions that come in and out of accounts, right? And that is something that has been happening for some time now. You mentioned that it's not a good idea to wait for the last 7 days. We're now a couple of a couple of weeks away, and therefore you're suggesting that people do it in this week itself. Why is that?
Very simple. Like I mentioned, that the portal is very is in a much improved state than where it was around 2 or 3 months back. But practically, we have been experiencing certain time zones or certain days where there are certain errors that come up in uploading. And typically, I mean, if you go and look at whichever year in the past, let's say 5 to 10 years since the online filing has begun, invariably there is a lot of load and rush that happens in the last 7 days. With this ordinary rush that happens this year, with the new portal there, at least I feel that this year there may be a slightly bigger problem with so many returns trying to be uploaded in the last 7 days. There could be portal glitches, and hence, if you for people who are willing or who are wanting to file it on time, I think the next 7 days from here will be better rather than waiting and then facing disappointment that one could not upload it on time because of the glitch in the portal. Hence, let's not wait for the last 7 days.
The last point that you've mentioned, Arvind, relates to the old regime and the new regime. Wouldn't you have to bear this in mind when you inform your company, if you are a salaried employee, at the start of the financial year itself, and you can't go back once you've made that choice?
Brilliant, Alex. Actually, the perception that you have in your mind is exactly why I have brought out this point, because for all the salary taxpayers, at the start of the last year, which somewhere in April, May is when they were supposed to indicate to their employer their choice of the regime. But what the fine print of the law says is, for every salary taxpayer, they have a choice to opt for either old or new, irrespective of the decision that they might have conveyed to their employer. For example, if somebody must have told the employer that I am opting for the new regime, still at the point of filing of the tax return, which is now, they can go and they can change it to the old regime as well. So, and I'm sure a lot of talks and debates have happened upon which regime to choose. But now that this is the action time where you make the final call to choose one of the two, the best method to do that is you check your tax liability under the old regime and the new regime, and whichever is lowest, you opt for that. So people who think or who are under the perception that I have declared an X, my decision to my employer at the start of the year, I have to abide by it. The input for them is no. They have a option to even change the regime right now at the point of filing of the tax returns.
Okay,
Alex, I would like
interesting.
to add one
There's
more
a point that you haven't mentioned. Yes, please go ahead.
Surprisingly, in a lot of, if I were to take some numbers, people specifically in the tax bracket of 20 to 40 lakhs, we have been seeing that new regime is working better for most of the cases there. So if some of our viewers are in that bracket, I think they should definitely look whether the new regime is better for them and take a call. Over to you, Alex.
Okay, that's interesting to point out. Certainly something to bear in mind. Because I think a lot of people initially did go for the old regime thinking that the deductions would serve them well. Now, there's a point that you haven't mentioned, and I want to very quickly get that across to our viewers. We just have a few seconds. A lot of them forget to do the e-verification, right? How important is that stage?
I mean, till the time the e-verification is not done, the ITR doesn't get processed. And that becomes more important because if you have filed for a refund, till the time your returns don't get processed, the refund doesn't get paid out. So better to finish the e-verification within the next 7 days of filing so that the onward process can start. And by the way, Alex, some good news is that we have been seeing refunds dispersal has been quite quick. The fastest we have seen is a refund getting processed within a month of filing. So, of course, subject to the e-verification having been completed. So I think it's a very valid point you're asking. Earlier, the better.
Thanks so much, Arvind, for taking the time. And I'm sure that these points will be very useful to people who are planning to file their tax returns over the course of the next few days. As always, a pleasure.
Been my pleasure, too. Thank you.